I'd like to welcome our new sponsor, Rothschild Capital Solutions. Rothschild is a commercial investment banker and direct lender. The company targets well-located assets for value-add investment, primarily in the Midwest and the Southeast. Rothschild is positioned to invest up to $35 million per deal. They may be just the partner or lender you've been looking for to turn your deals, even the most aspiring, into reality. Need capitalization beyond a debt financing loan? Rothschild gives you a full set of options: JV equity, bridge, preferred equity, mezzanine, development and construction. What do you need? The chances are Rothschild can provide it, as well as the experts to make the deal real. Click on the banner below the show to contact Gary Williams now. You've got the deal, Gary's got the backing you need. Click now. Hello and happy November 11th. Welcome back to another exciting edition of Rate Desk. I'm your host, Michael Thomas, here to talk about multifamily interest rates and other news. Going over to the markets today, they are mixed. We are seeing the Dow came down a little bit, but both the NASDAQ and the S&P 500 were up on the session. And going over to the 10-year, boy, there's been a lot of movement on the 10-year yield. That is now approaching 1%. The magical 1% range is 0.98. It's 20 basis points higher than where we were last week. Quite a big move there. We are also seeing the crude oil futures now in the $41 barrel range, which is good to see. Jumping over to multifamily interest rates, that rapid uptick in the U.S. 10-year Treasury is having a bit of an impact on the FHA rates. They're still low, but they have upticked from last week. So we are looking at a rate right now on a 223F 35-year fixed of 245. That is 2.45. And we're looking at the 221D for 40-year construction rate, just around 3% fixed for 40 years. Jumping on over to the agency desk, a little bit of movement there. Largely, I'd say it's range bound to last week. The Fannie Mae is trading at about 298. That's fixed for 10 years. And the Freddie Mac, we're looking at that at about 307. That is also fixed for 10 years as well. Jumping over into other news, a couple things I want to speak with you about today. One is bridge lending is hot. In particular, I was speaking with a lender who does new construction and then bridges from the certificate of occupancy to the permanent takeout. And some projects are not agency eligible or they're not agency ready. You really need that interim financing solution. And there's just a lot of business to be had currently during that lease up period. If you're a bridge lender that has solid rates, there's just a very big market, a very active market currently for that, something that is a positive trend and really good to see out there. One other area that I just thought was interesting to note was the conversion of the hotels into multifamily. Speaking to another associate today about how there's a lot of profit potential in that. You can make up to $15,000 to $30,000 of levered profit per unit if you time it right, you do it in the right market, and you're converting. And it really made me think of shopping malls as another potential opportunity. Might be harder to pull off. Obviously, those conversion spaces are a little more extensive to reconfigure. However, if you could combine something like that into a mixed-use setting, I just see that there could be a lot of big opportunities in that space as well. And lastly, I just want to mention, these rates are still at an all-time low, sizing up a very large construction project. And let me ask you this question. Would you borrow $100 million at 3%, fixed for 40 years, non-recourse? I think the answer to that question is yes, as I would as well. I mean, these historically low FHA rates are just incredible and present a generational opportunity to develop in this time period. If you've got the patience and the wherewithal to get through the HUD process, contact your lender, because boy, it's still a really great time to lever up and continue to build multifamily housing going forward. That is all I have for you this week. Thank you for tuning in to another exciting edition of Rate Desk. I'm your host, Michael Thomas, signing off.